So, this video is going to be about the cash flow quadrant. It's a rich dad, poor dad concept explained. This is cash flow quadrant. You have employees, self-employed, business owners, and investors. The first part of that would be employees. You work a job and you get paid by the hour. You trade your time for money and you're taxed at 37%. You'll make a set amount of money every hour, and as soon as you start working, you'll make that income. This is by far the fastest way to make that initial $100,000. However, you pay some of the highest tax rates, and the tax rate you do pay increases as your income increases. There's a diminishing return on your effort, which should be demotivating to you. This fact alone should push you towards better options. In addition, your income potential is limited to the amount of hours you can work in a day. So some examples of that would be a barista, a person sitting behind a desk all day, or a construction worker at a job site. So the next one up would be a self-employed person. You own your job, you trade certainty for control over your career, and you get paid for the work of one person while doing the job of 10. You're underpaid for what you do. However, this is the gateway to becoming a business owner if what you're starting is scalable. Limit your time in this area because what you're doing is double taxed, underpaid, and you trade your time for money just like an employee. Some examples of that would be, say, a mobile detailer or a landscaper, a solo operator, going around cutting lawns by himself. Then you have a business owner. Like I said, this is a self-employed person who scaled up and now leverages the time of others to make money. This person gets 1% of 100 people's effort instead of 100% of his own effort. This spreads the risk over many people, which keeps the money flowing even if one person gets sick and can't work. You can legally have lower taxes than people on the left side of the quadrant. The average tax rate for a corporation is 24%, and that can go lower. This is where you gain freedom because you can stop working and the company will keep moving forward without any input from you. Two examples from that would be the top picture, the person in the middle, probably a CEO managing a whole bunch of managers at that table. You have the person below, or the picture below, that solo operator that built his landscaping company up to a multi-million-dollar corporation that now has multiple trucks, multiple employees all working for him. Now, by far the best place in this quadrant is the investor category. This is where you need to be. This is the purest form of freedom you can get while making money. You enjoy the lowest taxes, you don't have a group of people you need to manage, and it's simply letting your money work for you. Investing is the fastest way to make everything past that first $100,000 per year. Long-term capital gains are taxed at 20% or less, and this area is also where you find that passive income that everyone keeps talking about. This is where you earn money while you sleep. The best part about this is that you can become an investor at any point in your life, at any time. So, some examples of that, top left-hand corner would be real estate. Say you buy a house for $100,000 and that house appreciates at 7% a year. That's $7,000 each year doing nothing on your part. And on top of that, say you rent out that house for $1,500 a month. That's $18,000 a year. So $18,000 plus $7,000, that's $25,000. If you invested the 100% of the house's value, that whole $100,000, you just made 25% on your investment. Now I'll do you one better. What if you just put the down payment on that house? If you just invested $20,000 of your own money and still made that $25,000 at the end of the year, that's 125% return on your investment. So that's real estate. You also have stocks and you have crypto. With all of these investments, do your research, but it can either go one of two ways. You can either make money or you can lose money. So yeah, there's that. But the main lesson that you should get from this is that you want to move from the left side of the quadrant to the right side of the quadrant, because the right side is where all the money's at. Business owner or investor, like 90% of the wealth is in those two categories. So what do? Everyone needs to start out as an employee. Working as an employee is the fastest way to make that initial seed money to invest with later. From there, you can either use that money to start a company in hopes that you can scale it to become a business owner later, or you can invest that money in assets that make you money passively. Becoming an investor is where everyone should strive to be in the end. You make more money with little to no effort, and you have full control of your wealth, and you're taxed the least out of everyone. So, in closing, Comment down below which section is best and why. Like this video if you think it's a good starting place for people to get their feet wet in the world of money, and subscribe to help the channel.